This is Talk Floor TV. We are at Surfaces 2013. I'm with Jeff King, attorney at law, who is the counsel for the World Floor Covering Association, the WFCA. And, Jeff, it wouldn't be Surfaces without talking with you.
Well, thank you very much, Dave.
One of the things I wanted to cover this year is about independent contractors. That's been an issue that has concerned floor covering retailers since day one, I guess, of this industry. You're going to be issuing a white paper on that soon. Talk about the situation as it exists now in terms of that whole issue.
It's become a very complicated issue for the retailer and the contractor in the flooring industry. The issue is whether you properly classify an individual or a group who are working for you, and it's most often installation, as independent contractors, or whether they are misclassified and should be considered employees. If they're employees, David, they are subject to very great many laws, and some of them are as simple as you now have to collect income tax for them, you have to collect their contribution to Social Security, you have to contribute the employee contribution, you have to collect their contribution to unemployment and Medicare, you have to collect and pay your portion of it. If they're independent contractors, that doesn't apply. There's laws like discrimination. In hiring and not hiring people. While some of that can apply to an independent contractor, it's absolutely always applicable to employees. American Disability Act, applicable to employees. So there's many rules and regulations that mandate that are mandated that you must do. You have to have workers' compensation insurance and other things for employees that you don't have to have for independent contractors. So from a liability cost standpoint, it would make sense. Why don't we just all use independent contractors? While that may make some sense, there are many reasons, business reasons, not necessarily to do that. Control over them, appearances. You can label your own trucks. There are many good reasons that you have the ability to have complete control of an employee that you don't have of an independent contractor. But on the legal standpoint, it would seem, from a liability issue and cost issue, why would you ever not use an independent contractor? And the answer is because it's very hard to know whether you classified them correctly. And I would love to be able to tell you there's this single 10-point test, and if you apply all these 10 points, you'll always be correct. Well, there actually isn't a single test. There are two basic tests, and they're used by different agencies. But even if two agencies, like the IRS and the Workers' Compensation Boards of states, tend to use the same test, it's called the control test. But they stress different points because they have different bases of it. So what we're trying to do with the white paper is to explain these rules to them and try to explain that when you're looking at an independent contractor and you realize that you're subject to audits by the Department of Labor, your local wage and hour people, by the workers' comp people, and by the IRS and OSHA, and whether you've properly classified them. The question is you need to understand what their concerns are and what they want. So if the IRS is coming in, their concern is that they're getting cheated out of tax money and proper contributions. So the independent contractor, you need to put in fail-safe systems that would kind of eliminate that possibility. For example, make sure your independent contractor has its own federal tax ID number. Make sure your independent contractor is a separate entity that's identified. Make sure that they have that identity includes some capital investment, trucks, tools, insurance. Workers' comp's coming in, and they're worried about people getting hurt and not having any insurance. An independent contractor not only doesn't have it's not covered by your workers' comp insurance, but he's not even covered by your health insurance if you offer any. Well, make sure they verify that they have bought workers' comp insurance for themselves, or they have some general liability insurance. All those types of things help, and we're going to put that together. We're going to explain it for the federal government. We're going to explain it for key states like California, Texas, Florida, Illinois, and others. And then we're going to sort of sum it up, give you sort of a checklist to worry about, and give you a master contract to work with. Now, the master contract will not work in every area. I've been bluntly honest with you. In some states, for example, if you have employees that do the same thing as independent contractors, it's an automatic assumption they're all employees, just all across the board.
That's by the IRS and the other organizations?
That would be, for example, that's a fact in Maryland and Illinois, for example, and other states as well. But the assumption is that if you have employee installers, and you also generally hire independent contract installers, they will treat all of them as employees, and you owe all that money for all that insurance, for all that overtime, for all that minimum wage, for all those deductions.
And that would be even if the independent contractor has set up, S corporation or incorporated in some manner or another.
Yeah, it's rebuttable. You can prove that they're independent contractors. So those types of things, setting up a corporation and doing all that, will go a great deal for you. But it suddenly shifts the burden that your burden is very high if you use both. In other states, it won't matter as much. So what we're doing in this white paper is we're trying to create a general contract. It'll never cover everything, but it'll give you a very good basis that you can take to your local counsel for that particular state need and just put in a little piece you're missing or that little extra. It may be overkill in some states, but it doesn't matter. You'd rather overkill something and insure yourself because the liability here can be horrendous because if you misclassify employees, they reclassify them. You owe all those back taxes. The IRS perceives that to be an individual duty by the owner of the company. So you can't just say, well, that's my corporate liability. It may become individual liability, those back taxes, that back contributions to Social Security, Medicaid, that unemployment contribution. And it can arise in many ways. We all worry about audits, but if an independent contractor suddenly not have work anymore, what does he do? He applies for unemployment. Where does he say he worked? Well, I worked over at the XYZ carpet company. Well, you say, no, he's an independent contractor, and all of a sudden you're in an audit and get in trouble. Please.
I was going to say there's been a lot of horror stories in this industry, and I've heard them, and I'm wondering, does that change as an administration changes? Is it tougher now than it was during the Bush administration?
It's gotten much tougher, though it was initiated under the Bush administration, so it's not a purely the new administration's role, but there's been a new coordinated effort, David, to be made. And that coordinated effort is that if an IRS goes in and does an audit and finds an issue with independent contractors, they then report it to the Department of Labor, who enforces OSHA, and they report it to OSHA and hour and wage. And then there are states that sign on to the same program, and they get reported to it as well. So an IRS audit that creates a problem is going to create a problem for you with Department of Labor, with the state wage and hour board, with your workers' compensation board, and the state IRS, or Revenue Service. And then the states are going to do the same thing back. If you have a workers' comp issue or an unemployment issue, and they think there's an independent contractor issue, they're going to report it back to the federal government and the other agencies. It's this coordinated effort. So the answer is that you can hold your breath and say, oh, I got through this. I got an audit. Okay, I got workers' comp. They call me an employee. I've got to fix that, and you kind of ignore the rest of it. No, it's going to be reported back. It's opening the proverbial can of worms. You're going to get caught by everybody.
So basically, every retailer needs to go down the checklist, make sure, as you've mentioned, they're incorporated, they have truck, they have capital investment, and so on. Even if you do that, as you mentioned, that's not fail-safe.
It's not fail-safe. There's no fail-safe rule. There used to be a safe harbor rule in the IRS, and that's really not applicable anymore. But there are two basic tests. There's what's called a control test and an entrepreneurial test. They overlap a lot. But the control test really is looking at how much do you control of the independent contractor. And that control is how do they bill. It can be as simple as how they bill. When do they work? Can they reject jobs? Do they work exclusively for you, etc. The entrepreneurial test looks more at what risk is the independent contractor taking. They're looking more at the independent contractor than your control over him. Do they have a risk of liability? Can they make profits or losses? Do they risk a loss? I mean, an employee generally, except for getting fired, never risks a loss. A business owner does. Well, if you don't risk a loss, you don't. Do they work for others as well? Do they own their own tools and stuff? Do they have a capital investment? Do they have IRS numbers? Are they separately incorporated? They look at those things as well. Again, in a state like Illinois, if the independent contractor is not a separate entity, and we may think of that as a corporation, but it could be a partnership, it could be an LLC, it could be some type of entity that has an identity, then the assumption is you're automatically employees. So the states affect you, federal government affects you, and we have to find a coordinated effort here. And I wish I could give you the little catchphrase that would say, I'm always safe. I can't, but I can. This white paper will take you down the road, I hope at least 90%, to where you're going to be able to survive most of this. And that little other 10%, you may have to look at your local laws and stuff. And then there's always that thing, the law is not a perfect instrument. You get the wrong auditor, and he's going to decide something differently.